Good morning, everyone, and welcome to today's edition of Frontier Opening Bell. I am Bosin Amofaye. On the show this morning, Luke Ofojebe, Head Equities Analysis at Vertiva Capital Management, and a registered licensed investment firm in Lagos, Nigeria, and Agnes Jital, Managing Partner at GBS Africa. Thank you both for being on the show this morning. A quick run through the African markets, equities for the trading day. The top five we cross on a daily basis: the Egyptian market in Nairobi, and of course the Zimbabwean market, the GSE finished in the green territory. Egypt was very big, 1.32%. Nigeria softened on Thursday to 0.02%. The BRVM fell by nearly 0.5%. Quite a whole lot of stories around different markets across these jurisdictions. But looking through East Africa, quite a number of economic data around inflation in Uganda, in Kenya as well, and a raft of central bank decisions. The island of Seychelles Central Bank left interest cut rates to 2% from 3%, and the GDP looking at 4 straight quarters of contraction. And that's part of the headlines from the East Coast this morning. Agnes, let's tee off with you.
Thank you, Boston. Good morning, everybody. Allow me to start with the Seychelles story, where the central bank has cut rates to 2% versus 3% as the economy sees another shrink due to COVID-related crisis. Obviously, Seychelles, very dependent on tourism, has been very proactive. Currently, it's the most vaccinated country in the continent, but despite this, they've seen a surge in COVID cases, and obviously an economy that is very dependent on the tourism sector. So these are measures by the central bank to try and intervene to support economic activity for Seychelles. But certainly, this comes after the news by UNCTAD report, which was released earlier this week, that shows that investment into the continent has shrunk due certainly to the COVID pandemic. Look, it's going to be a struggle, and the bounce back that we were expecting, and we were hoping that a country like Seychelles really going ahead investing in vaccine rollout, we were expecting this will be recovering, will be on the recovery trend. But however, it's not the case. But a country that is really very well managed, a small economy, I'm sure they'll find a way out. Another story on Kenya's inflation rises to 6.32%. This is up against the central bank target rate of 5%. This, my view, is contributed to the fact that May, June are usually planting season for the country, and certainly will affect the yield. So cost of goods going up. Another issue that is affecting the inflation rate in Kenya is cost of credit. Kenyans are finding it very hard, very expensive to borrow. Again, these are all related to the impact the COVID crisis has had on the country, in the country.
Okay, thank you so much, Agnes. I know for the West Coast in Nigeria, and everyone is looking in from the outside, has to do with the PIB, which is the petroleum industry bill. So if you cross to West Africa, Nigeria is the big story. I know quite a number of earnings and numbers on the street, from PZ Cruisons to Flamings and others, and a few of insurance like Sasako. But I look from Vertiva Capital, I'm sure the PIB is a big story for those of you who are research analysts. Whatever you're covering right now, you can't ignore the PIB.
Yeah, good morning, Bosin, and good morning, everyone. On as regards the PIB, clearly is going to be a positive for the Nigerian oil and gas sector, and the reason for this is because over the last 10 years, we've been seeing a sort of uncertainty in the oil and gas sector because potential investors were not sure of what will happen when the bill is eventually signed into law. So that uncertainty has actually stored investment inflows into the country. And that explains why Nigeria's crude production has remained around 2 million barrels per day over the last 10 years. But given now that the bill has been passed into law, clearly it should be a positive for potential investors who are still interested in um, channeling funds into Nigeria. Now they can have more clarity as regards how to go about it. However, we need to note that the impact is going to have on oil production in the country is already diluted by the fact that long-term outlook for oil in particular is actually bearish, given the increasing advocacy we are seeing for a greener environment. So in advanced markets, we're actually seeing like intense campaign for greener environment, for the use of cleaner fuels. So based on that, we should see over the next 10 to 15 years, we should see like a smooth transition from consumption of renewables to from non-renewables to renewables, and that should significantly impact oil demand. And that's why we're seeing a number of these oil producing companies, reducing their footprints in other emerging countries. For oil companies in the US, for instance, I mean, they started announcing in 2019 that they will start divesting in Africa from late 2019, and we've been seeing that since then. The likes of Shell, Chevron here in Nigeria, they've made their intentions known to actually sell some of their assets in this country because of political uncertainty and a couple of other factors. So even though the bill has now been passed for it to be signed into law, and of
Yeah.
course we should expect it to materially support the oil and gas sector. But because of the long-term bearish outlook for oil, which is
Yeah.
the major theme right now, we do not think that impact on the oil and gas sector will be very material.
Yes, the whole conversation is still on. It's not over yet to know what the final document will look like. The National Assembly has passed it. There has to be a harmonization between the upper and the lower houses. Then when it gets to Mr. President, we don't know what is going to be some final take on the document sent to him. Luke, 30 seconds. First half 2021, how brutal is it for investors within the Nigerian market? Give me 30 seconds on that.
An interesting ride, really. I mean, quite negative, clearly. I mean, looking at what's happening in other emerging markets, because of anticipated recoveries, we saw buy side sentiment across a number of economies, but that's across a number of developing economies. But that wasn't the case for Nigeria. I mean, year to date, the market is already down around 5%. And the reason for this is because foreign investors are still concerned about currency devaluations in the country, looking at the widespread between what you have at the NAFEX rates and what you have in the parallel markets. So because of concerns around foreign exchange rates, foreign participation in the equity market has dropped significantly, and that's why we are seeing more of sell side pressure in the equity market, and that might just linger on for the rest of the year.
Interesting. Thank you so much. A couple of other headlines within the West African space relating to Cameroon's eurobond at 5.95%, Ghana's Fitch outlook cut to negative for two commercial banks, and of course the Africa Renewable Energy Fund (AREF-II), which the first financial close of 130 million euros had been completed via the AFDB. Let's turn to Southern Africa very quickly with the manufacturing PMI retracing slightly to about 57.4 according to latest data. Agnes, the Zimbabweans also, central bank also left interest rates unchanged at 40%. What's your take on these two economies?
Person, with your permission, can I comment on the Cameroon Eurobond issue? This is the second country.
Please go
This is
ahead.
the second country to come to the market. They issued a Eurobond, which is equivalent to about $800 million. This was oversubscribed. They received order book of about $2.5 billion, and at the pricing of 5.95, which I think is quite competitive compared to Kenya, that came to the market only last week to look for $1 billion oversubscribed at a coupon rate of about 6.3%. I think is an indication of perhaps investors looking for yield. I wouldn't say it's a confidence in our market. We are desperate for yield, and I think this is investors chasing yield, and so African governments desperate to finance their economies post-COVID are coming to the market. And my only concern is the proceeds, both Kenya and Cameroon, the proceeds from these Eurobond issues is going towards debt repayment. How do you borrow to pay debt? It's not very, very sustainable, but I don't know. I just really wanted to comment on that because it's quite interesting, and I'm sure we're going to see more countries coming to the international capital market because there is such a demand for that. On the South African market, perhaps Zimbabwe looks, they've held their policy rate at 40%. The headline that I'd like to comment on is the S20 protest. Earlier in the week, we thought that the leader had fled to South Africa. It just shows how political instability has an impact, obviously, on the economy. And we've seen F&B branches are closing, and I'm sure other companies will not be able to operate in such an environment. But it is just it's a shame. It's a small country that has been fairly stable, fairly peaceful, to see these protests ongoing. But I do hope that things can return to normal.
When you piggyback a little bit, thank you, Agnes. Look, when you piggyback on Nigeria, by the way, looking at MTN, talking about selling down on its holdings in Mauritius to retail investors. How should retail investors in your market, is this music to their ears for Nigerian retail investors in MTN?
So that has been the strategy for MTN since early 2020 to actually divest some of its stakes in some companies. We saw what happened as regards Jumia, and even here in Nigeria, they are also planning to sell like 40% of their stakes in MTN Nigeria. In my view, I think it's something that will successfully materialize, given the fact that the company has strong fundamentals backing it. Yes, that's not a controlling stake, but when you look at the strong fundamentals in terms of their data operations, the growth we've seen in their data revenue. I mean, over the last 5 years, their data revenue has grown at a CAGR of 32%. I mean, that's what, excuse me, that's one of the highest you can find in the industry. And let's not forget the fact that phone penetration in Nigeria is still at very low levels, currently around 40%. Data usage in Nigeria is also at very low levels. And let's not forget that Nigerian population is growing at an average rate of about 3%. So that's, creates a room for a significant upside going forward. So for investors who are aware of this, is they are definitely going to jump on the train and just subscribe to this tender offer, because the fundamentals backing the company are actually very strong.
Thank you. I was getting worried about the headline that Africa is heading towards its worst week since the pandemic starts. Agnes, what's your take on this? This is coming through from a number of news wires, from Bloomberg, from MoneyWeb in South Africa, and others. Do you think we should tighten our belt here on the continent? Do you think this could have impact on the whole steps being taken to get the economy out into a recovery and on into a resilience for frontier
Thank you,
Africa?
Boston. I think that's quite a worrying statement. I have seen a lot of economies in Tanzania, South Africa, all closing down or partially closing down part of their economies. This obviously will be a strain. Obviously, governments want a working nation. You want people to work so that they can pay taxes, so that that taxes can be used for public service. And remember, the continent is the least vaccinated. Just about 2% or barely 2% of Africans have received any form of vaccination. Well, the Western economies, at least, their vaccination rate is up to 40%. So this is quite scary. Remember, we were lucky in the beginning. We didn't suffer high fatality rates or high infection rates compared to the larger economies, also given the fact that our healthcare infrastructure is very weak, and therefore any rise any rise or surge in COVID-19 pandemic is just going to be a scary thing for the continent. I do hope that it can be maintained. A lot of countries, particularly Eastern Africa, this is the cold season, so suddenly when it's colder, then it seems like the virus seems to be spreading. But it's quite worrying that still people were hopeful that the economies will open, particularly to take advantage of summer break in the West, where travelers come to the continent. which will be will support the tourism sector and the hospitality sector. However, with the news of rising cases, this obviously is not a good thing for the continent. I just do hope that it can be maintained.
Let's hope so. Let's all keep safe. Remember all the standard protocols as far as the virus is concerned. Thank you, Agnes. If I take a look up with the Egyptian market, because it looks like investors are piling in and out of this particular big economy north of the continent. According to reports, according to Bloomberg, Egypt is looking to start derivatives trading. Nigeria is looking to start stocks futures, according to latest announcements from NGRs. We don't know how soon that will happen, but the SEC has approved at least 7 of such stock futures to be traded on the NGX. It's going to be the first in West Africa. But of course, when you look at Egypt with the whole forecast of its economy to grow about 4.2% this year, 5.2% next year, it looks like a whole lot is working well for Egypt. How do you respond?
So I mean, looking at Egypt, I mean, since 2019, we've seen the country taking steps to actually grow its economy. I mean, 2019, we saw when deregulation was put in place, so that's helped to free up funds to finance other key sectors. And let's also not forget that since talks around the African Continental Free Trade Agreement started, the country has actually been strategic in terms of trying to maximize gains from this agreement, and that's we've seen that play out across all sectors in the country. And looking at its GDP growth, I mean, it's currently now the second largest economy in Africa, and that's just mainly driven by steps taken by this country since 2019. Then, in terms of derivatives, I mean, there has always been that consensus view that African markets are not as developed as markets we find in advanced economies. So, in a step to actually improve on that, we've seen some African countries, taking steps to actually bring in derivatives into their markets, and that's what Egypt and Nigeria have been working on over the last few years. But for Nigeria, there has been some challenges as regards why that has not fully materialized. But for Egypt, I think before the end of the year, we should see that coming into play, and that should help to attract investment inflows too. Because for the savvy investors, they also want to be able to maximize gains from financial markets via various means, not just by buying and selling. You should be able to buy futures contracts, call options, put options, and a couple of other options for investors that are willing to take more risk, really. So they are definitely going to be open to the use of derivatives to maximize gains. So I think it's going to be a major positive for the Egyptian markets.
Yes, it's going to be positive for everyone. Take us a whole lot closer to the international or developed markets. Thank you so much, Luke Ofejebe from Vertical Capital, Head of Equities Analysis, and of course Agnes Jital. We thank you so much from London, from GBS Africa, the managing partner. Thank you both. Have a great weekend, and this is the show for today. We'll see you next time.